Welcome to StockCharts, Tony. We're here talking about the OptionsPlay add-on for StockCharts. And I've got some questions I think you can help me with, and I think these questions will help anybody get going with that add-on really quickly. So as somebody from StockCharts, I really like visualization of data. And so the first thing that catches my eye when I look at the OptionsPlay add-on for StockCharts are these really interesting charts and graphs that you have with the two lines and the red and the green. What is that about? Help me understand those charts.
Yeah, those are what we call the options P&L charts. And what they give you is a visual representation of if you were to buy that option today and held it all the way through the expiration date, what are the possibilities of profit versus loss depending on if the stock were to move higher or move lower from where it is today. And it gives you a good sense for how much potential profit there is if the stock goes in the favor you expect it to, how much potential loss you have if it goes against you, and the ratio of the two. And I think that's really the best way to use those P&L graphs is to give you a visual representation of how much potential you can make versus how much potential risk that you are taking on that trade.
Okay, and so if there's like more red and green on it, then it's has higher potential but also higher risk. Is that kind of how it works?
Yeah, so what you're looking at is basically the ratio of green to red. You obviously want strategies that have more green and less red, but we also have what's called an OptionsPlay score that's actually designed to actually quantify how much red versus green there is, and it gives you a good sense for risk to reward.
Yeah, so I want to talk about that score. So I see like scores, some scores have red and some scores are green. And then some scores have like double checks or some. I think the green double checks are probably pretty good ones to look at. Is that right?
Yeah, so let's break down the score first. The inspiration actually came from playing poker. Because when you're playing poker, you have two things. You have risk to reward and you have probability of success of that hand. And you use those three metrics to gauge whether it's a hand that you want to play or you want to fold. So the inspiration is trying to give you a same sense for what is the expected outcome of that strategy if you were to play that same hand 100 times over, what is the average outcome of that specific hand so that you can get a better sense for whether you have a positive or negative expected value. So when we talked about before, the ratio of the amount of red to green on that P&L chart, when the red to green ratio is balanced, meaning you have an equal amount of red to green, you effectively have a score of 100. And we basically color code this for you to give you a good sense for whether you have any type of edge when it comes to trading this type of strategy, whether that edge is in your favor or that edge is against you. And it's color coded. So anything that's red means that you have an edge against you. Anything that's yellow means you have there's no edge in one way or another. And if it's green, that means you have some positive expected value. There's no bounds to the score itself, just like the way that risk to reward ratio technically has no bounds. We basically use the same type of methodology for our OptionsPlay score.
And then there's some checkboxes above the graphs. One says bullish, the other says bearish, and we've also got high implied volatility. It seems like things kind of flip, right? It starts out in bullish. It seems like they flip when I click on the bearish one. But it's not an exact flip. When should I use the bullish? When should I use the bearish?
Yeah, so if you look at the axis on this P&L chart, the x-axis is basically determining whether the stock moves lower or higher. So when you talk about going from bullish to bearish, well, we are flipping the strategies because we want now for the stock to move lower in order to make a profit versus in the bullish case, we want strategies that'll make money if the stock goes higher. So that's what we're flipping for. And the idea of the OptionsPlay tool is so that for any stock you pick out, you can have different outlooks. You can have bullish outlook, a bearish outlook, and for options traders, we have a strategy called high implied volatility, meaning what do you do when volatility is high, or how can you take advantage of the fact that a certain stock has high implied volatility today? So those are the three general outlooks that an options trader might take, right? Versus an equity trader, you're basically taking a bullish or bearish view. You can't take a view on volatility. But as an options trader, you can take a view on volatility to either believe that the current volatility environment is underpricing what future volatility is going to be, or if it's overpricing. And just as a general rule of thumb, option prices tend to overestimate volatility versus the actual historical volatility.
Okay.
So there is an advantage, theoretically, a statistical advantage to selling premium or selling options because of that implied edge that you have as a seller, which is why we specifically have a button for When implied volatility of an option is high, how can you take advantage of that?
Now, above the graph also is some advice, what appears to be advice. Buy 100 shares, buy this call, so on and so forth. How can I use that, and what should I do? Should I check anything else before I follow that advice?
Yeah, great question. So we built these 3 strategies where we tell you exactly what strategy to trade, what expiration date, what strike price, because most traders, and especially beginners, struggle with this, with this selection of option strategies, just because there's too many options. You pull up an option chain, there are hundreds of strikes across dozens of expirations. And that choice is only useful if you've already selected a strategy. A lot of times, most traders might not even know what strategy to choose if they have a specific outlook on the stock, which is why we built our tools in a way so that the only thing you need to select is a strategy and an outlook, and we'll do the rest. Meaning we're presenting you with 3 strategies that all are suitable for that specific outlook. So for example, if you're bullish on Apple, we're going to show you 3 strategies that you can all take for a bullish view on Apple, and they go from beginner to advanced. That's why we start with the 100 shares of stock to help any equity investor who's using this tool to better understand, if I was a stock investor, what would be my P&L potential. And then what we do is we look at a simple option strategy with buying a call option. And then the 3rd strategy on the right here is a vertical spread. And maybe you've never heard of a vertical spread.
Maybe I've never heard of a vertical spread.
Which is designed to help you progress as a trader, to go from something you understand today to something that maybe you're just learning now to something that you might want to learn in the future. And as you progress through it, there are advantages as you work your way through to the strategy on the right-hand side, where you're getting a little bit of best of both worlds.
So kind of the left side is the straight ahead, relatively safe lane kind of thing to think about. Middle has some more potential, but also some more risk. And the right has a lot of potential, but a lot of risk. And I think I do see that because the areas on the graph are bigger, the red and the green. Now there's also, at the very top of this, there's something that says trade, which is what I'm looking at, but there's another thing that says income.
Yeah.
What's the income tab about?
Yeah, we tend to find that options traders fall into 2 categories. You have traders who are looking to speculate on the directional view of a stock or ETF, and then you have more systematic traders that are looking to generate income. So one is not better than the other. It's a matter of what your preferences are and what's more important to your portfolio at the moment. And many traders will execute both types of strategies at the same time for different purposes. So the trading tab is specifically designed for when you have a directional view on the market, how can you potentially take advantage of that directional view? And income is less directional focused and more focused on just generating consistent income for your portfolio. And that's really taking advantage of that excess implied volatility that I'm referring to before that gives option sellers an advantage, a way to systematically trade that strategy in their portfolio and identify the setups that you can use to generate consistent income for your portfolio through selling a cash secured put and selling a covered call, or what is otherwise known as a wheel strategy.
Okay, so if I own a stock and I want to use options as a way to get money without having to sell the stock, the income tab's for me.
Exactly. There's 2 ways that you can use it. One, you can use it to acquire stocks that you are looking to buy using selling puts instead of placing a limit order. That gets paid. That pays you income to acquire that stock. I think that is the most underutilized option strategy by all equity investors.
And is that a safe? Is that, how risky is that kind of strategy?
It's less risk than placing a limit order, because what's happening is you have the same obligations as the limit order, but because you're getting paid income, that income that you collect actually decreases the total risk that you take compared to someone who's using the same limit order to buy the same stock at the same price. You actually have less risk using the short put than to place that limit order, which is why I think it is the #1 most underutilized option strategy by equity investors.
That's a great thing that probably a lot of equity investors just have no idea about.
Exactly.
Options just give you so much more flexibility. There's also kind of a grid down at the bottom of this, which catches my eye again. I'm a graphic guy. A bunch of different potential calls with red and blue. And one is checked. So I can explore different possibilities here?
You had asked a question before of what things do you look at before you place that options trade. And we tend to find that when a lot of traders migrate from equities to options, there are just a lot more things that you have to check that you may not even be aware of or think to check before you place your first options trade. And a good example of this is checking if there's an earnings date before the expiration date of your option, because that is a catalyst event that could potentially meaningfully change the P&L or the outcome of that particular trade prior to the expiration of that option contract. And it's important to understand whether there is an earnings announcement built into the contract or not to help you make your investment decision. So these are some of the things that we check for. We check to look for the options play score, which is the expected value of the strategy. We look at earnings date. And another thing that we look at that I think most beginners either don't know how to look or don't even know to look for, which is liquidity. You know, as an equity trader these days, liquidity is not something that most retail traders have to worry about. And I would argue on the options side, most retail traders don't really have to worry about liquidity either, especially in the top 400 or 500 names. But if you're trading something that's past the first 400 or 500 in terms of market cap size, liquidity does tend to fall off from an options trading perspective. You can still get filled, but you got to work a little harder to get those fills. You have to be smarter about how you place your orders, what type of orders you place. So that's why we think it's really important for options traders before you place your trade to have these things checked for you, and that's what the strategy checklist does. And the check marks that you refer to are giving you a visual indication of how many things are checked off or how many things are working in your favor on that checklist without having to expand and look at the chart list, the checklist yourself.
Cool. And I like that there's also a lot of text in here that tells me exactly what we should expect in terms of income and return if we go this income route.
So we have the plain English explanation
Yes.
for both trading and income strategies. Actually, any strategy you structure within options play, we have a plain English explanation for it. And that's specifically because there's a lot of technical jargon that's typically associated with options. And not everyone understands what each piece of that jargon means. So what we're trying to do is we're trying to take all of the important metrics that you need to know for an option strategy and present it to you in a plain English format so that you know exactly how much risk you're taking, how much potential you have to make on the trade, and what is the probability of that actually happening. Those are the central metrics that every options trader needs to understand before they execute their trade to better understand the potential outcomes.
Yeah, I see that there are Greeks on here, but I have to go look for them. I like that I'm not immediately hit with a whole bunch of Greek stuff.
Yeah.
Plain English is way better than plain Greek. So I'm back on the trade side of things, and yeah, there's below these wonderful graphs, there's P&L simulator, risk and investment calculator, trading range simulator, and plain English. Of course, I'm going to go to plain English, but when might I want to look at these other ones?
Yeah, the P&L simulator is probably one of the most useful tools because we're showing you 3 strategies side by side, and we're helping you progress as a trader from the more simple strategies to the more advanced strategies. The P&L simulator allows you to actually see how the 3 strategies perform side by side for any scenario that you have for the underlying stock. So in the example before, we were talking about if you were to buy a call option on Apple or if you versus buying the stock, you can simulate what happens if Apple rises by 5% between now and that expiration date, and we'll show you how those 2 strategies compare. And what if Apple goes 5% lower? How much do I have to risk? Arguably more important to actually understand the risk side than to understand the positive side, because I think a lot of traders miss that step. You know, you're so focused on, oh, I would like to make $5,000 on this trade, but how much are you risking to try to make those $5,000? That's what the P&L simulator is designed to help you better understand.
Yeah, there are 3 sliders, and I guess the top one lets you choose what the price might be doing.
Yes.
And so you move the top one to do that.
Exactly. So there are 3 inputs that you can have into the P&L simulator. One is the price, which is the factor that will have the biggest impact on your overall strategy. The second is time, which will have the second largest impact on your option strategy. And the third one is changes in implied volatility, which will have an effect, but relatively minor compared to the first 2. So that's why we have it sorted in those 3 orders of from what has the biggest impact on your options price to what has the lowest.
So you can just play what-if games all you want
Exactly.
and learn a whole lot. Now, there's another thing caught my eye was the trading range simulator. It's got a nice little bell curve-like graph, so yay, I like graphs. How does that one work?
So when you think about option strategies, if you think about the challenge with the P&L graph, is that it charts all the possibilities of what happens if the stock goes all the way to zero, or what happens if the stock goes all the way to infinity. And in theory, there's a payoff at every single point of that graph. But the reality is that there's an expiration date on your options strategy, and there's a realistic range that the stock can trade in between now and that expiration date. So if you have a $200 stock today, it's probably unrealistic to really consider what happens if the stock was to go to $10, or what happens if the stock were to go to 1,000, right? Even though those are still discrete points in the calculation, it's not something that you really have to factor into.
They're way out on the tail
Exactly.
of what's possible.
So what we're first trying to determine is what is the realistic range for this stock to trade in. And when we calculate our options play score, the true risk reward metric on your strategy, we're really looking at what are the possibilities within a reasonable range. And what that does is it avoids strategies that have unlimited potential or strategies that have unlimited risk. Because anything with unlimited potential or unlimited risk, you can't calculate a risk to reward metric for it. So that's why we use a reasonable trading range. We look at what are the possibilities within that range, and that's how we calculate a real P&L score for you using the options play score.
Okay, when I move the sliders here on either the P&L simulator or the trading range simulator, am I going to change anything else in this, or is it just for that particular little piece of the tool?
Yeah, it's just for that little piece of the tool. It doesn't recalculate anything. It doesn't change anything. It basically is saying,
so I can play what if games all I want.
Exactly. You keep all things constant. What are the potential outcomes of my strategy?
And so the plain English then gives me 3 columns of English, yay. That's for each of these 3 graphs up above, right?
Correct.
And there's no change I can make that would alter that text or alter those graphs. Those graphs reflect the reality of the current situation.
But each of those graphs you can customize, meaning you can click on the modify button.
The modify button.
And you can change any of them. You can change how many contracts you're buying, you can change the expiration date, you can change the strike price, you can change the strategy. So it's incredibly flexible for those traders who do have more customized strategies they want to trade, or they have a particular preference on what expiration date, what strike price they want to choose. Any changes that you make there will reflect in real time within the P&L simulator, the plain English. Everything that you change, we will recalculate instantly on the options play tool.
Okay, one last question. So I did just hit modify to see that. There's a big tempting blue button down at the bottom that says flip strategy. What does that do?
It basically reverses the strategy. So if you were trading, let's say, a long call, it'll flip it to a short call. If you have a long put, it'll flip it to a short put. And this way, it's designed for you to quickly modify more advanced strategies. A lot of times when you're trading advanced strategies like butterflies or Condor, sometimes you just want to flip the strategy from either you believe implied volatility is going to expand to a strategy that you believe implied volatility is going to collapse. Or if you have a bullish strategy, it's going to flip it to a bearish strategy. So a lot of times when you're playing with more advanced strategies, you kind of have to move things around. You have to move all 4 legs at the same time. And we basically just built the button so that you click once and it flips all 4 at the same time.
Okay, Tony, I want to talk to you some about the strategy center piece of the options play add-on for StockCharts. This is a page that looks really, really interesting. It doesn't have the graphs, but it has a lot of data. And it looks like there's a lot of different ways to slice and dice the possibilities here. I think this is designed to help me pick which stock I want to zoom in on with the other tool.
Yeah, that's exactly right. So the strategy center is really what I think is the coolest part of our partnership and what we've built. And it's something that doesn't exist anywhere out there. I've been trading options for 18 years, and I use this page every single day now that we've built it, because it is the best way to select the best possible trading opportunities in the market right now when it comes to options.
Okay, so at the top of this page, well, there's some information, and then there's several drop downs. And the first drop down, I know it used to just have 6 choices, but now in the new version of this stuff, it now has a lot more. But let's talk about those first 6 choices. It looks like we've got 3 bullish and 3 bearish possibilities here. What are those about?
Yeah, so those are trade idea scans that we have built with your scanning engine here at StockCharts.com. And I really think of the Strategy Center as the best of both worlds. You get the powerful technical screening capabilities of StockCharts with the option strategy finder that we have using OptionsPlay. When you combine the both, what you're getting is the best of both worlds. So what you're getting are stocks that, from a timing perspective, are the most optimal to get in now for either a bullish or bearish move based on our technical indicators that we have back tested for many, many years. But then, the challenge that we've always had with running scanners is that a scanner might throw out 40, 50, 60 different names on a given day. It's really difficult to figure out of those list of stocks which ones you're going to apply an option strategy on. Because
you need to get down to like 5 or something like that.
Exactly. And you have to look through each one of those symbols first to say, you typically do some type of sanity check on the results of a screener to begin with, right? And that takes a lot of time to manually go through those charts. And what I love is the chart list feature within StockCharts, because it allows me to go through 30, 40 names very, very quickly, meaning I know that I've reviewed all 30 to 40 charts, and I generally have a sense for which chart setups I really love, which ones I don't, and those are the ones that I can quickly research some more on an options trading perspective. But options traders know this pain point a lot, which is you've done your research on the underlying, then you go pull up the option chain, and for whatever reason, you cannot structure an options trade on that specific name, whether it's because there's not enough liquidity in that option, or maybe there are not enough listed expiration dates and strike prices for you to trade your specific strategy. There's lots of reasons where you could have done a lot of work on the underlying only to then realize that you can't structure an options trade. So the reason that we built the strategy center is so that you can basically do both things at the exact same time, so that for any strategy, any expiration date, any strike price, we've already ran all 30 to 40 names through your strategy and ranked it for you. So that if something doesn't show up, you know for a fact that you're not even going to bother looking at that specific symbol. And those 30 to 40 names are not just coming back one by one, it's ranked for you from top to bottom based on the option strategy. So if you like to trade options, you know that not only are you pinpointing stocks that have the best technical or best timing from a technical perspective, but you're also identifying out of that list of stocks which ones have the best risk to reward from an options trading perspective. And that saves you hours of time every single day you're trying to find an options trade.
Yeah, it sounds like a real time saver. These 6 things, just again, for somebody maybe who's just starting out and maybe wants to kick the tires, you've got bullish trend following, bullish counter trend, and bullish outperformance. I mean, I'm going to stick to the bullish side because that's just a little simpler, normal kind of thing. And I would assume bullish trend following is probably going to be a great place to start when you're just learning this stuff.
Yeah, I think for beginners, the trend following is probably the most obvious place to start. We're identifying stocks that are in a bullish primary trend, have recently taken a bit of a pause, and we're looking for that bullish trend to continue. So we built these scans in a way so that they're pretty self-explanatory as to the type of scans. But if you want to actually look into the specifics of the technical indicators and the parameters that we use to generate these scans, these are not black boxes. We're fully transparent in how we generate these scans, so you can do an audit on the specific scans, what indicators we're using. We have, as you said, trend following scans, which are pretty straightforward to understand. We also have counter trend scans, and those are my favorites. A lot of people feel that they're riskier, but I actually find that when you are trading counter trend, you are earlier to the trend. That's actually less risk, in my opinion, when you're early to a trend, because by definition, by trend following, you're already late to the game, right? Mm-hmm. So you're basically hoping that the trend continues, versus a counter trend, we're basically trying to capture things in the very, very beginning of a trend. We all know the old adage, buy low, sell high.
Yes.
But how do you actually buy low? You have to buy low when everyone else is selling and no one else is thinking about buying. And that's what our counter trend strategies are designed to try to identify, of those major turning points when a stock goes from a strong bullish trend into a bearish trend, or vice versa. And then lastly, the outperform scan. It's one of my favorite ones, and it's one of the scans that I actually got inspiration from something that Grayson wrote, a relative strength scan that he wrote that I modified for my own purposes, which are trying to find stocks that are outperforming the S&P 500. And what that gives me a good sense for are stocks that potentially institutions are accumulating over the last couple of months, and that's why they are outperforming the index, right? Or vice versa, underperforming the stocks that maybe there's more distribution than the index funds are selling. That gives me a sense for where the institutions might be dumping some stocks. So I use outperform and underperform to help me identify stocks that are somewhere in between that counter trend and trend following signal. Because for me, counter trend, sometimes you could be a little bit too early to the game. trend following, I find sometimes you're too late to the
late.
game. That outperformance, when it's kind of early, when it's in the early innings of outperformance, that's really kind of a lot of some sweet spots that you can, I think, is a good sweet spot for a lot of traders.
Maybe the Goldilocks
Exactly.
approach.
You're trying to be a little bit more patient and not trying to catch things at the very bottom, but you're also trying to identify as soon as there is some accumulation to try to jump on that train.
Okay, and then what's really cool is now we have, like you were saying a minute ago, in addition to these, kind of 6 pre-created lists, we have all of your chart lists. So if you have your own scan, or if you have any other kind of way to create a list of stocks you're interested in, you can plug that list into the strategy center here and get the skinny on the options possibilities.
That's exactly right. This is by far the #1 requested feature when we had this launch, and it was only the 6 scans that we had in there. Chart lists are my favorite thing within StockCharts. I've been talking about that for quite some time. The ability to run a scan, have it automatically populate a chart list is something that I've been doing from the very beginning. And this way, every single morning when I log into my StockCharts account, either on my phone or on desktop, I already have all the symbols from the overnight scans that I've ran in a chart list that I can easily review and quickly identify where I think the best trading setups for today are.
So we've saved you a ton of money.
A ton of money.
And time. Yes.
Time and money. And what now I can do is take that list of securities that I've built all my custom scans for and overlay an option strategy on it instantaneously. Because like I said, the biggest challenge with any scan is that you get a list of symbols, and from a scan perspective, they are all equal, right? Because they all have met the criteria of the scan. But if you get 30 stocks in a list, you're not going to be able to buy all 30 stocks. You have to figure out a method or way to rank those stocks or decide which one of those you want to buy. And that's what the OptionsPlay Strategy Center does, is it ranks those stocks based on the option strategy you prefer to trade. We support 9 different option strategies,
Yep.
and you can fully customize the parameters of that strategy. Now, you don't have to, right? We actually give you starting points. So if you just want to pick a strategy, we have already predefined the optimal starting points for that strategy. So if you're a beginner, I'd say go with just the standard settings for each individual strategy. So for example, if you're using a chart list of stocks that you think are undervalued and you think that they're going to increase in value going forward, pick any bullish strategy and basically let us rank your undervalued list from top to bottom based on the option strategy that you want to use for that bullish list. Whether you want to buy calls and let us identify which calls are cheapest to buy, or if you like to sell puts, let me help you identify what are the most expensive puts that will collect the most income for you for this specific strategy. And that's what saved me hours and hours of time, because I used to have to do all of that work manually, which is why ever since we've entered this partnership, this is the one tool that I use every single day when I'm looking for options opportunities.
So these strategies are all really interesting, and most of them look pretty straightforward, but you have to tell me, I'm not great on options. Please tell me about Iron Condor.
Let's break it down into the different categories of strategies that you have, right? So you have at the very, I would say, starting point. For anyone who's just starting out with options, I recommend looking at cover calls and cash secured puts, because those are suitable for if you're not an options trader. Let's say you're just an equity investor. Those are 2 strategies that can help you enhance your equity investments, your long-term equity investments, by helping you generate an income stream to purchase the stocks that you want for your long-term portfolio, and then once you own those stocks, to generate another income stream as you hold on to that portfolio, right? So that's what cover calls and cash secured puts are designed for. Then let's move into more on the trading side of things. You have long calls and long puts, which are simple single leg option strategies to take a bullish or bearish view on the stock. And this is your starting point if you are brand new to options trading, you're just getting started, and you want to take some leverage out, if you will, to take a directional view. Long calls and long puts will help you with that. Now, here's the thing. Long calls and long puts have their benefits, but there are also some drawbacks, right? Predominantly around how much premium you have to pay or how much you have to pay up to get access to that leverage. So I would say for most traders, more experienced traders, they want to graduate from buying calls and puts pretty quickly because of some of the downsides that you have with that strategy. So that's where we start going to the more advanced. And we have 4 different vertical spreads you can trade. You have bull call spread, bear put spread. Those are your directional strategies. And then we also have 2 credit spreads, a bull put spread and a bear call spread. So they are all designed to do kind of the best of both worlds, if you will, for both buying and selling options into a single strategy. And they're used for different purposes. The debit spreads are usually used for when you expect the stock to make a big move. And credit spreads are more so when you expect the stock to make a relatively mild move. And there are pros and cons to each of those strategies. And then an iron condor is kind of the deep end of the pool. You're actually selling 2 credit spreads at the same time. You're basically taking a slightly bullish directional view and a slightly bearish directional view at the same time. So you end up with a strategy that's relatively neutral. So you only sell an iron condor if you believe that the stock is going to trade in a specific range, and you get to take advantage of excess implied volatility. So like I said before, there's a slight advantage to be an option seller. And an iron condor is basically taking that advantage and doubling it in your favor because you're selling both the bullish and the bearish credit spread at the same time. So you get twice the amount of exposure to that decrease in implied volatility. And because it's neutral from a directional perspective, you can trade it in a lot of different scenarios. So it doesn't really matter whether you have a bullish or bearish view. You're kind of taking a much more neutral view on that specific stock.
And like you said, the rest of the settings here, you typically just want to leave what it gets you automatically.
So there's a lot of research that's gone into those specific settings for each strategy.
I got time frame, risk profile, and max risk.
Yeah. So the max risk is something that is going to be unique to each individual user. And we generally recommend that the max risk you use on a strategy should not exceed 2% of your total portfolio value. So let's say you have a $100,000 portfolio, you should keep that max risk somewhere around $2,000 on every trade that you look at. What that's going to prevent are account blowups, so that no single trade should ever account for a sizable loss in your portfolio. Right. The other 2 parameters, the expiration date and strike price, this is where we've already done a lot of research on the best practices for each of these strategies. So for many traders, you can just leave those alone. Select the strategy, we will automatically select the expiration date and strike price for you. For the more advanced user who is looking to be more tactical, either in your strike selection or more tactical in your expiration date selection because of perhaps a catalyst that's coming up. Maybe you want to avoid earnings. You can make those fine-tune adjustments by selecting a specific expiration date and a specific choice for your strike prices. But like I said, that's for the more advanced user. I would say your average user can just use the standard parameters that come with each strategy.
A quick question more for just, again, people that are starting to use this and something they might encounter. It happens. The match not found message. Talk a little bit about what that's about.
Yeah, so like I said, there are many times where I've done all of this work on the underlying equity research. I've looked at the charts, I've looked at the fundamentals, everything looks great. And then I pull up the options chain. And for example, when you look at something that's very liquid like Apple and Tesla, there are options listed every single week going out 7 weeks, and then monthly and quarterly options going out 3-4 years. But once you get past the first 400 or 500 very liquid names, the amount of listings that show up for each option contract starts to get reduced. So a lot of times what happens is that you find a security that you really like from a technical perspective, you pull up the option chains, and there are only an option that's listed 1 month out and the next option is listed 3 months out, which means that if you're looking to trade a 60-day option, it just doesn't exist. So what we're trying to do is basically saying that if, let's say, you want to buy a debit spread, which traditionally we use a 60-day option for, let's prevent you from having to do too much equity research on that underlying, because you already know that there's no matching option strategy for that particular stock, and it's designed so that you only focus on stocks where at the very least there's a matching option strategy for, right? So on a list of, let's say, 30 stocks, maybe 5 of them we can't find a valid option strategy on that. Let's not even bother looking further into those 5 stocks. Let's focus on the stocks that we can find a valid option strategy for. So that's why we built that, is to kind of just also further reduce the amount of time that you might waste looking at an equity, hoping that later you'll be able to find an option strategy. If we already know for a fact that there's no option strategy, we can trade on that equity.
Nope. Thanks for that explanation. Is it safe to say that you're going to be focused on the ones that are green?
Yes, so everything is, so depending on the option strategy you choose, we rank it by different criteria that are important for that strategy. So for example, if you're selecting a cover call, we're going to be focusing on income, meaning how much income are you receiving, and we rank it top to bottom. So if you have a list of stocks that you own, and you're looking at cover call strategies on that list, we obviously want to show you which stocks generate the most yield at the top of the list and work your way down. Because if you're not going to sell cover calls on every single stock you own, you should start at the ones that are going to generate the most yield and work your way down. So that's why we rank it that way. Now, if you're buying a call option, we're going to look at something different. We're going to look at how cheap that call option is. If you're using a debit spread or an iron condor, what we're really looking for are the risk to reward ratios of that specific strategy. So depending on the strategy, we prioritize different things, and we automatically rank it for you based on those things. That's already pre-built for you into the strategy center. So you don't even have to remember, okay, for this strategy, I want to prioritize that. For another strategy, I want to prioritize this. It already does that for you automatically using the strategy center.
And then also, is it fair to say that I'm going to be more interested in any of the green ones where the number is much larger? The larger the number, the more interested or the more I should check it out.
Generally speaking, yes, that is the
simple
yeah,
approach,
the simple way to look at this is yes. The ones with the highest options play score will be at the top of the list. There might be some small things that cause one to be slightly better than the other, but as a general rule of thumb, you're going to find the higher options play scores are the ones at the top of the list, and the lower options play scores are the bottom of the list.
So this looks like it saves a lot of time. If you're an experienced options trader, is this still super useful?
Yeah, I think this actually saves, if you're an experienced trader, more time, because the more experienced you are, the more methodical in your approach that you typically are with your options strategy. And this basically automates the entire workflow of your strategy, so that in under 2 seconds, you have a list of securities that you're interested in, the corresponding option strategies personalized to your very specific option strategy, and in a couple of seconds. So this is actually the most amount of, so I would say that for traders that know exactly what they want to do, this is going to save you more time than any other tool. For someone who's newer to options trading and they're still exploring, they're going to have to figure out what the right parameters are for them. And they're actually going to have to spend a little bit more time. But as an experienced trader, you're actually going to save the most amount of time with this specific tool, in my opinion. I've been trading for 18 years, and this is the tool that I must rely on every single day, because it saves me, it not only saves me time, but it helps me make sure that I'm pinpointing the best possible opportunities.
If I'm using this tool, do I ever have to look at those old pages of options numbers with like a million numbers and spreads and all that stuff?
You know, I've been doing this for about 18 years, and we've built our company specifically on helping people avoid using the options chain. And short answer to your question is no. If you're using the strategy center, you should never, ever have to pull up an options chain ever again.
So no Greeks, no options chain, and a lot of really, really good information and time saving.
That's exactly right.
Sounds awesome to me. Again, this is the OptionsPlay add-on for StockCharts, and highly recommended.